One thing we've been talking about on the show a lot is lack of exits. Jason, in the first quarter of this year, we saw some IPOs, we saw some M&A activity.
It was going great.
It's going great. Things have changed a little bit in the last couple of weeks. But one thing that
did something happen?
I think something happened, and then it didn't, and then it did, and then it didn't, and then it partially did, then it doubly did, but then also didn't. It's been very confusing. Anyway,
how dare you say something happened? Everyone knows it did.
Tariffs are over 100% on China law, and that's definitely different. All right, so there's a group called Setter. They're a secondary trading platform, Jason, and they released their Q1 report showing the most in-demand secondary companies. And I wanted to share this to everybody because there's a bunch of Twist 500 companies on here, but also I think it's an interesting look at what VCs are trying to scoop from the secondary markets, which is a key place for liquidity these days. Now, at the top of this list, there's some names you kind of expected: SpaceX, Anthropic, but then there are some surprises. xAI ranked higher than I expected it was going to, given its youth. Figure AI, the humanoid robotics company, Jason. Grok with a Q is on there. OpenAI ranks under Stripe with 6th and 7th place. I thought this was a fascinating list.
Anthropic is at 61 billion. Is that the share price or is that the market cap? Let's see. SpaceX 350. That's market cap.
Last public round, Last private round that we know of the valuation publicly.
Got it. Okay. EV expected value. Last round expected value, I think, is what they mean by EV there.
Yes.
So there are tons of these secondary markets. It's kind of like a little bit of gray. There's some weird stuff going on here. Stop scrolling it, please. Just leave it at number one. And so if we were to look at this, Anduril at 28 billion, SpaceX at 350, and Figure at 39 billion. Figure at 39 billion does not make a lot of sense to me. That's a pre-revenue company, right?
Yeah.
So that's the one that stands out. I mean, xAI does have some revenue, and it owns Twitter, so it has billions of revenue there. So that makes sense. Defense tech, they have billions in revenue. Anduril, SpaceX has billions. Stripe has billions. OpenAI has 10 billion. Grok is crushing it. So when I look at these, the only out of the top 10 that stands out to me here as maybe you would debate is Figure AI. Just so you know how these are driven, secondary markets here are driven not by venture capitalists, but by high net worth individuals.
Right.
And so if you're a high net worth individual, I can go on these and I get pitched on them all the time. And I can buy these, pay massive fees, like typically maybe 5 to 10% to buy them, and then a 20% carry or 10% carry, or you may just buy them without carry. And when I go buy $1 million worth of Anduril, and I own about 7 million worth of Anduril right now. I'm joking. That's my guy, Palmer Lucky. If you were to go buy $1 million worth of Anduril on this, you're going to pay like $150,000 or $100,000 in fees to get in there.
Wow.
So it's a bit of a racket. A lot of founders don't like this. And they don't like that these markets are doing this because it just creates a bit of chaos for them.
How much of this do you think, because like you said, this is not VC driven, this is just individuals who have the money to throw around. How much of these do you think is driven rather than based on the fundamentals of the companies by their notoriety and prominence in the culture? Because I can't help but notice a lot of the companies near the top of the list, they're brands that are recognizable in the world. Your Stripes, your OpenAIs, your ByteDances, your Neuralinks, they're all it's famous companies.
I would say the panache, the patina, the branding is but 20% of this.
Okay.
It is playing a factor, but a lot of this is cause and correlation. So the reason some of these are famous, like SpaceX and Stripe, is because they've been private for so long. Both of those have been private for well over 10 years now. Alex will give us the exact numbers. Those two companies have been private for a long time, which means they have a large number of shareholders. They've got a large number of shareholders because they have so many employees. Employees vest over 4 years typically. If a company like Stripe is 12 years old, you might have an employee who has had 3 different grants, a 4-year grant, a 4-year grant, a 4-year grant. Maybe they've had, if it's a really high-performing employee, maybe they had 4 grants where they overlap. Somebody told me when NVIDIA was private that like Jensen would just drop extra shares on people. He had like a pool of shares that he had like God power on. He didn't have to go to the board or anything. He would just be like, you did a great job. Boom, I'm doubling your shares. And he wouldn't even do it. He'd have somebody go do it for him.
Wow.
So he was just like dropping these kind of things on people. But there's many, many sellers in these companies because they've been private for so long.